Why is China facing a banking crisis? If you have been following what's happening in China, you'd know, the country is being hit by a perfect economic storm, and the banking crisis is at the eye of the storm. There are many in the news media, who report, that China is heading towards a sharp economic downturn. But, we don't get a comprehensive explanation, behind what's causing the economic gloom and doom, in general, and the banking crisis, in particular. So, we thought, we'll give you the background, and provide the detailed analysis. We have tried to categorize the reasons, under different headings. We want you to know, these problems were created over a long period, unlike seasonal issues, like the recent drought, or the power crisis. So, let's take a plunge, and take a look. 1. Real estate bust. Yes, this is the big one, because the real estate industry is almost 30% of the entire Chinese economy. Since the late 1980s, China has been building, and building. In China, wealth and real estate ownership are almost synonymous. The Chinese stock market is choppy, and not transparent. The Chinese Communist Party government can change their policy any day, and wipe out billions from the corporate sector, like what's been happening in the past 2 years in many sectors. So, people don't trust investing their money in stocks. The Chinese people have put 70% of their entire wealth in real estate. The insatiable appetite for real estate has helped a strong appreciation for the properties, until it stopped growing in value, since 2020. The Chinese banks also grew, along with the real estate sector, by providing loans for the purchase of the real estate property. When the market became stagnant, the developers were facing difficulty in staying profitable, creating a list of distressed developers. Currently, the total outstanding real estate loans is above $9.2 trillion, and the banks are experiencing payment defaults, not only by developers, but also from home buyers, putting a big strain on their balance sheet. Though Evergrande Group was the one in the news, there are a lot more, who are in the same boat. Many banks are facing bankruptcy now, unless sufficient liquidity is provided, by the Central Bank of China, also known as People's Bank of China, PBOC. Unfortunately, the problem is so widespread, that PBOC can't help everyone. 2. Illegal financial instruments. Don't worry about the fancy title we have given here. We'll make sure we explain this in simple English, so you understand better. In July 2022, customers of 5 banks, located in Zhengzhou, the capital city of Henan province, found out that their deposits have been frozen since April 2022. Nobody understood why. But, it later came to light that their money was not really kept as bank deposits at all. The banks lied to the customers, used their money, what was supposed to be put into bank deposits, but instead, utilized it on some risky investments. The unsuspecting customers were fooled by the lure of a slightly higher deposit rate, but ended up losing their entire amount. After this incident, it came to light that there were many other banks in China, which have created a fancy vehicle, called trust funds, which were also involved in risky investments. Such misuse of deposit money has resulted in huge losses for the banks. Though criminal prosecution has led to arrests and conviction of some bank employees, the real culprits, namely the CCP party officials, who had a higher culpability, have escaped from any consequences. 3. Corruption. Corruption is a serious problem in China. Though the government often cracks down on corrupt officials, the crackdown has been used more as a tool to settle political score than actually stopping corruption. The CCP officials figure out ways to become part of the corporates and small businesses, though it is not readily known. Whenever these corporates and other businesses need money as capital, the CCP officials have a lot of control over the bank executives. So, the banks are forced to lend money, even if they become aware that there is a high amount of risk involved in the lending. So, Corruption has played a bigger role than what appears on the surface in creating a banking crisis, especially when the risky companies fail to repay the loans. 4. Geopolitical tensions. China has picked up fights with many nations, including the United States, Australia, United Kingdom, India, Japan, South Korea, Vietnam, Germany, Taiwan, Philippines, and many more. Many of these countries are Chinese customers, who import products manufactured in China. Due to the aggressive attitude of China, these countries have started diligently looking for alternate locations to source their products. Since many of the manufacturing units involve a heavy overhead, when the business volume went down, some have not been keeping up with the loan repayments, leading to losses to banks. 5. Lending for megaprojects. With China, the infrastructure development took to new highs. Soon, the Chinese leadership got carried away, and lost sight on the purpose of these investments. They wanted everything big, the largest high-speed rail network, the biggest dams, the longest bridge, and many more, collectively called as the megaprojects. The study on the feasibility analysis, or return on investment on these megaprojects, was never carried out in an objective manner. The four big Chinese banks, namely, Industrial and Commercial Bank of China, Agricultural Bank of China, and China Construction Bank, were all involved in lending towards these megaprojects, and the outstanding loans are in the trillions for these banks. These megaprojects are making operational losses, even after several years of completion, especially the high-speed rail network. Some of these loans are under severe stress currently. On top of all this, China started an ambitious project, called the Belt and Road Initiative, or BRI. This project involved creating infrastructure in around 60 countries, at a cost of approximately $3 trillion, where China provided loan to these nations, to build their infrastructure. Unfortunately, the infrastructures were not profitable at all, and hence the countries are now pushed into a situation where they are unable to repay their debt. This has added to the banking crisis in China. 6. Pressure on CCP officials. China is governed by a single party, namely, the Chinese Communist Party, or CCP, with a proper structural hierarchy. Since the liberalization of the Chinese economy more than 4 decades ago, the CCP officials on all levels have been under constant pressure to show a high growth on their respective area of control. Since 2008, the level of pressure the CCP officials go through has only increased. Most of the times, the officials find the easiest route to show growth by building infrastructure, as well as commercial and residential buildings. As you can expect, when the CCP officials are under pressure, they force the banks to lend them the money, and eventually, it has led to pushing the banks to hold a lot of non-performing assets, and thereby weaken their balance sheets. 7. Ghost cities. As seen previously, the infrastructure and buildings were built under the direction of the Communist Party official, with the sole intention of showing a high growth, which added up to the overall GDP numbers. But these new constructions led to creation of new suburbs, or completely new cities, and were mostly unoccupied. Hence, they were named as ghost cities. At any given time, there were housing for about 200 million people to live in these ghost cities, but there was nobody living there. Since the banks were lending money, people were investing in these ghost cities, in the hope of seeing an increase in the property value. However, the appreciation had stopped, a little over 18 months ago, and it has shown a downward trend, in general, all over China. The banks which lent to these ghost city projects, are now stuck with assets that aren't worth the loans. Those were the 7 main reasons why the Chinese banks got into the position that they are in right now. The Chinese government realized that they have a massive problem with unplanned growth, and have made poor investment decisions that are bleeding the banks, as well as the real estate companies. So, they came up with a policy known as 3 red lines. It will take a separate video to explain what it is, but we'll just touch upon the rule. The 3 red lines policy, introduced in August 2020, provided a framework to reduce the loans on the real estate industry, and put limits on their borrowing, based on their outstanding loans. It also applied to the banks, and imposed limits on their lending levels. Unfortunately, this policy reduced the money supply available to buyers, as well as lenders, and resulted in a precipitous decline in the financial health of the real estate companies, eventually leading to their default. So, the attempted cure caused further damage to the wound, leading to the banking crisis we see today. Thanks for watching.